Hello, today we have a special edition about the most liquid options on ETF funds. We are looking into those funds, and at the end I have some hot ETF funds to watch or even to buy for it. Okay, let's go. So always when we talk about most liquid ones, we always refer to the open interest. Well, this is when you buy an option, usually it's buy to open, and when you sell the same option, it would be sell to close. So in other words, whatever is open is the open interest of the option. So in other words, here of the SPY, for instance, the S&P, there's I think an open interest volume per strike, or let's say per expiration, of maybe 10-15 million. So this is the most liquid one, and as you can see, you can trade these options almost daily. I mean, you have an expiration of tomorrow, after tomorrow, and so on. So for the first 2 weeks you can really trade that day by day, and then it goes into the weekly ones, which you can see here, and then it goes into the monthly. And you see it goes down, 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 till actually you can trade this SPY till December 25, which has now 900 days. Maybe the interesting thing is that you would at least have a higher volatility, but I think no one is doing that to trade an S&P, or let's say to trade a SPY. Volatility, as we say, is quite low, and you see this is now maybe the point of trading options like that. I just feel that they have not anymore this kind of option character, in a way that there's a time value or there's a premium on it. For me, those options here are like considered a kind of mini futures, in a way that you just trade and hope that the market goes up or down, because it really moves through the liquidity. It moves up every cent, up like the S&P, and downwards the same. So in other words, I would say that this is good for, let's say, day traders watching the options, let's say, day by day, and probably they are chartists and they say, okay, let's do quick movement of maybe a trade of 1 hour or 5 minutes whatsoever. But as I said, I think it's not really the real character of an option. So the same goes with the Nasdaq QQQ Invesco ETF. I mean, it's exactly the same. Do you see? You have a daily expirations, the first 2 weeks, quarterly. Here we have maybe June 25. Volatility is slightly higher, while it's the Nasdaq is always there's a bit higher than the S&P. But I would say again the same impression, not really options. Here, maybe as a small remark, this is exactly what we have, this zero DTE, that this day to expiration, this is really for day traders. So let's say tomorrow you can trade this one, and then it would trade the same as you would buy or sell mini futures, as there's no time premium anymore, because it's the same day as expiration. So as I said, this is a perfect tool for day traders, and this is why the volume is so big. So let's focus on, let's say, on ETF funds which have, we can say, weekly expirations. So in the survey, let's say, of all those liquid ETF funds, we find the emerging market iShares from MSCI. I just give you here some information. They have a volatility of 16 to 20. Then this one is certainly interesting too, the Russell 2000 shares. So he really consists this kind of mid cap US companies. Very interesting, with a volatility of 15 to 22. This one really, I would, if you really focus on this kind of mid cap in the United States, this is probably the best one. Then always you can not only do shares. I mean, you cannot do you not only ETF on shares. Here is an ETF on bonds. This is certainly very interesting too, though the volatility is lower, 7 to 10. And here you have seen a print screen. Let's say if I would do now a short straddle on this kind of high yield bond, ticker symbol is HIYG. Well, I would have 45 credit on both sides. So in other words, the break even is approximately 72.50 to 75.40, but it's always because this index is not moving that much because it's a bond index. But as I said, this is an example, very liquid. If you want to do a kind of expectation that, let's say, the price will more or less remains the same at this level, okay, then you would sell both sides because it's an option of 1 week expiration. Liquid are all those so-called SPDR funds. Let's say this is actually my favorite one, the XLF, which is nothing else than the financial sector of SPDR, S&P 500, and volatility is around 20%. Then you see here you have XLF, you have XLI, which is the industrial, and then you will have even XLC, which is the communication. So these three ETFs would probably cover you nicely, let's say the sector of financial, industrial, and communication. So this is certainly these three I would certainly use it. And as you have seen, I use them, or especially the XLF, for my J Lizard strategies. It would be possible for all of them because, as I said, they move very nicely in a range in which actually you can really profit out of the premium. Those are weekly options, so you can really trade each one by week. Now, really what came up, and which is probably a hot issue, is this so-called ARK Innovation Fund, ARKK is ticker symbol, because they have really come up with option volume incredible. Anyway, all these ARK funds by this Caddie Woods or whatever her name is, they have come up really strong, and this is certainly something you have to keep an eye. Really interesting to trade when you want to trade options in ETF. You should not miss to trade one of those ARK funds. I have used now this ARK Innovation Fund. Is a very this is the biggest one they have, and you can see here the top holdings. So we can say differently. Tesla was now, I would say 1 month ago, traded at $155, and now it's 255 or 200. I mean, Tesla went up just $100. So in order maybe to avoid to go directly into this Tesla, you may just actually buy this fund. Or as I said, then you could sell a put. I took here an example of a short straddle again by using the price at the moment about 44.5, selling both sides, you would get a nice premium of 1.67 credit. It's because the volatility is quite high too on that one. So be aware that it can go up, but it can come down too. But as I said, I like very much in where they are invested, innovation in future things, even robotics and whatever. So certainly this is something you should consider if you want that on a long run. Or as I said, now when we come to option, to sell always a put option would be quite interesting. I mean, you would sell one put option, your risk it would be 4,400. You see here the buying power would be even less, maybe between 800-900. And as long as you would roll over this option, you would not have to pay the full 4,450 as here indicated. So I would certainly look into that. Now, next days, if maybe the stock would fall below 44 or even to go 42, well, then it's certainly worth to sell a put on it. Here is another example of another ETF, this time on gold, a weekly option. Really interesting too to trade this one if you are focusing on gold. As well, this one, again, an XLE on energy, oil or whatever gas, which is certainly interesting, higher volatility. And as long as the oil price is around the $70, certainly an interesting thing too. So you have an ETF on gold and energy, both high volume. So this is certainly interesting to follow. Weekly options as well. Now here I have added two more hot issues, I would call it, because of the performance. They are monthly options. So in other words, you can only trade by month. So the liquidity is not really given by this. But again, this I focus more on a kind of long run. I mean, you just sell once a put and you wait 1 month. It should be no problem, because anyway, that one is the semiconductor, which is certainly a thing in the future when we think about artificial intelligence. So you have to be in this. Volatility is 28, is very nicely, as I said, monthly options. And that one really, I'm actually, even myself, I invested, as you can see here, is this kind of Global X Robotics Artificial Intelligence, the ticker symbol BOTZ, with a 24 volatility, a kind of monthly option. And as an example, I have taken here just again, if you would sell the 30 straddle, actually what I have done so far, you can see here where is a -1 is I sold the 29 July, this 28 July. So my strategy would be that whenever the market would come down here, I would always add maybe 1 or 2 more put options, because you can see these prices now are already quite interesting. I mean, I sold much higher and now I could maybe cover them, but the point is more that I expect that this index goes in the long run between 30, 35, even to 40, because they are really in this kind of market, which actually now everybody is crying for, a kind of artificial intelligence. So I think this is the market you have to be. And again, I would use this as a long run. So in other words, just keep selling puts. Is I do here 28, 29, when it goes over 30, okay, I would do a 30 put and so on, because I just believe that this is the future to invest. And there are always setbacks, I agree, but setbacks would be for me again an opportunity to buy more in the, or let's say to sell the puts, whatever. Special edition of the most liquid options. You have seen that I have focused on options in each segment of funds. I mean, share, you can bonds, gold, oil, and some hot issues. Generally speaking, for me, it's interesting or more focusing on these kind of strategies like this J Lizard on indices, because I think it's more, it's better to work in indexes than in simple shares, because volatility is lower, and like that you have less this kind of strong up or down trends. So it's probably the best what you can do in order to generate a passive income. Well, the next edition will be about this so-called reverse ETFs. So this is another tool, very interesting to trade, and I will issue that shortly. So I hope you have enjoyed it, and for any question or suggestion, just feel free to drop an email. That's all for today. Have fun. Bye-bye.